Hey guys, JJ here, back from School of Trade. Welcome back to your nightly newsletter. Today's the 15th of January already. I can't believe how fast this month is going by. It's going to be December before you blink, guys. Don't let this time go by so fast here before you guys get started with us as a student over at School of Trade. What a day. What a day. This is one of those days where we just, well, this is the reason why we're traders. Days like today are why we put up with days like we saw on Monday this week, right? Or all last week. So today was one of those days. It was dipped in gold, or maybe dipped in crude, or dipped in euro, right? Whatever you'd like to call it. Rallies across the board, right? The word to describe today would be rally. Now, if you listened to last night's newsletter, we talked about the fact that there were some clues that we were seeing that I had a feeling last night today was going to be something big. And I think you can see we were right on target with that prediction late last night. So a very bullish day today in the markets. As I look back over my charts right now, crude up huge today. Russell up huge today. So basically we were right last night, right? Big moves across the board today. Looking over my trading journal here today, I recommend everybody gets a trading journal. Write down what you're seeing. This morning, what happened here? Red Star News. Red Star News this morning, 8:30 a.m., PPI, came out as expected. Really didn't get a lot of information from that at 8:30, pretty much right as expected, so no major news there. Came in this morning, crude oil was bullish the moment we sat down at 8 o'clock this morning. It was relatively easy. The hardest part about trading crude today was wondering when it was going to stop going, right? That was the hardest part. Russell gave us some great opportunities. Gold dropped today. Of course, the confidence keeps growing here in the U.S., and gold's getting pounded. 10:30 today, we had inventories. Now, remember, last night we heard from the API number. Remember, there are two types of inventory numbers. There's the API, the American Petroleum Institute, right? That comes out Tuesday evenings at 4:30. If you recall, last night of the newsletter, we said there was the third consecutive week of draws, so lower inventories in the API. And then today at 10:30 a.m., every Wednesday, we hear from the Energy Institute. And, of course, 10:30, we saw a huge draw, negative 7 million barrels versus a negative 1 million they were predicting or they were estimated. Also, too, if you read into that news report today, one of the big things we saw today in the news report was that the demand for distillate and gasoline through the roof. Now, that's big because distillate's going to be heating oil, right? So distillate's, the big difference here is when I think distillate, I think heating my house in the wintertime. And I know most of the country, in fact, most of the world's been buried in snow and freezing weather for the past few weeks. So clearly there's been kind of an uptick in demand for heating oil, right, and all the byproducts of that. But the gasoline demand also. Now, gasoline demand, wait till you see today's Beige book, because that really now comes together. Gasoline demand was up today as well. So very bullish environment, low inventories, high demand. Think about that, right? So let's put it in terms of a shoe store. So welcome to JJ's Shoe Store. I have low inventory, and that low inventory either means I'm not getting enough supply from the manufacturer, okay, so not enough supply, or maybe it's because you're buying too many of my shoes and I can't keep up with the demand. So if we saw today, this is why it was so bullish, if we saw today on crude inventories lower than expected, then we have demand higher than expected. You guessed it. That's going to cause, bam, speculators jump into the market. And we were already in the trades long when this thing took off today. Again, the hardest part about today on crude was just where to stop buying, right? That was the hardest part. We found some very good targets up here, though, just shy of 95 even. Let's see here. Just like we anticipated last night. Did you see the Russell today? Did you see the Russell today? Gapped right up. We'll take a look at that in a moment back on the computer here, but crude skyrocketing today, Russell skyrocketing today, gold, opposite direction, dropping. Some more news here this morning or this afternoon. The House approved a $1.1 trillion spending bill this afternoon. That keeps the U.S. government open until September 2014. Now, remember how they keep kicking this can down the road, right? They keep extending the budget. Well, this is the most recent version, a $1.1 trillion spending bill this afternoon. The big news, though, today, right, because the Red Star News at 8:30 wasn't that important. The big news today, though, was the Beige book. Beige book, now remember, we're not putting too much weight on this stuff. Beige book, of course, is 2 weeks old at this point. Remember, the Beige book, much like the Fed's meeting minutes, it's old. So this information is not current. But bottom line, the Beige book today, 2 o'clock, we heard, and this is, I quote, the economy keeps improving across all districts. So it sounds like, remember, there are 8 different Federal Reserve banks around the country. They're all linked together, right? So this Beige book, this is all the notes that those 8 different districts had before last week's FOMC report. Okay, so this is old news. They saw the economy improving across all districts. Okay, now in the past they've said specific districts. Now apparently all districts are improving overall economic strength. Retail sales increased dramatically. I thought this was a really important clue for us right now because we talked about this yesterday. If consumers are confident, they're going to have a job and they have enough money to pay for things, they're going to go and they're going to spend their money, right, down at local shopping malls. So retail sales increased dramatically, quote, dramatically. Real estate, right? Now, I just bought a home here in Los Angeles. Real estate market's pretty hot here, but apparently it's hot everywhere right now. Well, maybe not hot. Right? The word they used was improving, incrementally improving. So real estate keeps incrementally improving. Costs of goods and services, prices are stable. Now remember, the Fed Reserve, as they're withdrawing stimulus, right, they call that tapering, as they're withdrawing this stimulus in the market, what's their big worry? Their worry is that prices tumble or prices skyrocket. Those are two evils they want to avoid. They don't want hyperinflation and they don't want deflation. They want it to be staying right consistent. So it looks like everything is good right now as far as prices go. Wages keep rising, although it be incrementally improving. They didn't mention it was rising by that much, but it does look like they mentioned here today that the wages do keep rising. So no wonder consumers are spending more money. They're getting jobs, they're making more money at those jobs, right? And they're spending it at retail establishments. And then the big thing here was rates, right? Interest rates. We heard from PIMCO today down the street here in Orange County. We heard from, there were 3 Fed speakers today. I can't recall the exact names of them. But basically, including the Beige book this afternoon at 2 o'clock, hearing from other professional opinions, it sounds like interest rates are not going to be going up anytime soon. Now remember, that doesn't mean that the banks can't increase their rates to increase their profit. In fact, if you're in our trade room this last week, that was one of the things I was talking about, was that the banks right now have the perfect storm. They have the Fed that's not going to raise their deposit rate, but at the same time, you've got an economy that's growing, so the banks, of course, are raising their 30-year mortgages, they're raising their CDs. I'm still waiting for them to raise my rate on my savings account, though, right? I get exactly 0 on my savings account. So if you know anybody at the banks, give them a heads up. We're looking for more return on their savings accounts. I'm kidding with you. Guys, we are the industry standard in trading education, right? You want to know why? Go online, register for our free trial. Go to schooloftrade.com, join our free trial. I want to invite you to come trade with me this afternoon in our trade room. Also, don't forget sidewaysmarkets.com. Make sure you follow our blog. That way you get the newsletter updates every day. Check us out on YouTube. We have probably one of the most robust YouTube pages you're ever going to find for day trading, so check that out. And again, join us as a member, whether it be beginner, intermediate, or advanced. Again, we are known as being the very best place to earn and learn. Now, we're just getting this started tonight. Welcome to your newsletter for Wednesday, the 15th. 2014. Let's take a look at what we're looking at for tomorrow. All right, guys and gals, let's jump right into some charts. Let's get ready for tomorrow. Markets were on fire today on Wednesday, but we want to make sure that we're going to make some more money tomorrow on Thursday morning. We got a bunch of stuff to talk about here, so roll up them sleeves and let's get to work. Now, first of all, before we run into all of our work here, guys, I do want to remind you, head over to School of Trade, register for that free trial. I get a special invite for you to come out and join me in the trade room tomorrow at 2 o'clock in the afternoon. Excited to see you there. All right, so take advantage of that offer. Let's go back over to the blog now. And the first thing we'll do is we'll remind you guys that you can always find any of the newsletter posts right here. You can join our free trial. You can get more information about membership. You can see how our students are doing. And don't forget, if you want to make sure you get these newsletters delivered to your email box, don't forget to register for the newsletter by giving us your information right there. Alrighty? So let's get started. First things first, let's talk about tomorrow's news. I'm going to work my way right down the newsletter as it's posted on our blog. And as you can see, right about now, it's just after about 6:30 Eastern time. So it's a little bit after 6. Moving forward here, let's grab our news. Looking at tomorrow's news, we can see here we got 3 Red Star news events tomorrow. And then we got Helicopter Ben. So this will be the last time we hear from Big Ben, right? He's our Fed chairperson, our Fed chairman. And we got Janet Yellen replacing him in February. So it will be interesting to see what he says tomorrow at 11 o'clock. He'll be talking about the challenges that are going to be facing central banks in 2014 and beyond. So it's going to be an exciting thing to listen to tomorrow morning. Philly Fed survey at 10 o'clock, and we got jobless claims and consumer confidence at 8:30. So it's really important we understand we've got 2 Red Star news events, and then we got Bernanke. So this is going to be an interesting Thursday morning. First of all, we kick it off 8 o'clock, 8:30 I should say. We got consumer prices and we get jobless claims. Jobless claims, of course, will probably be the headlining news report there. At 10 o'clock tomorrow, we get Philly Fed survey, right? The Philadelphia Fed manufacturing survey. Going to be manufacturing news at 10 o'clock tomorrow, which means we definitely want to be watching closely for markets like crude, gold. I'm sure they'll all be active because it's a Red Star news event. Now, I keep referring to these as Red Star news. They're listed on Econo Day as Red Stars. They are known as being a market mover, right? This would be a red flag if you were on Forex Factory or a different type of website there. But bottom line is that Red Star news tells me that we've got more people, more opportunities, more volume, more volatility is going to be seen around these 8:30 news events. So be ready for those tomorrow morning starting at 8:30 a.m. Every morning we come into our trade room at 8 o'clock Eastern time and we set up our alarm clocks and we make sure that we're ready for this. So make sure you're ready for it tomorrow as well. Alrighty, moving on forward here now. Now that we know what the news is today, let's take a look quickly here at what's in store for crude oil. First chart I'm going to open up here this evening is going to be our VIP chart. We're trading the 214 contract of crude, and I'm going to ask you, rewind the tape and go back to yesterday's newsletter. And do you recall what we said yesterday in the newsletter? That's right. An opening print above 93 even. Right? Opening print above 93 even. And what do we say? Get ready for a big bull run. And that's exactly what we got this morning. Now, honestly, we didn't have to open up above 93 to get this information. Whoever was sitting in my trade room this morning at 8 a.m. or even earlier than that, I was chatting in our chat room this morning with all of our members around the world talking about the fact that it was very obvious that crude was bullish. In fact, today was such a straight up type of day that in all reality, you could have fallen asleep, hit the buy button with your forehead, right, and you would have made money today. So it wasn't difficult to make money on crude today, right? But of course, you've got to be prepared to capitalize on this. So good move today. Great prediction we made last night. Let's now get ready for tomorrow. First of all, the 2-day relationship on our VIP chart says that we're bullish. The trading range that we saw today was very wide, right? As you can see here, it was wider than most of the previous days. Remember, when I'm looking at trading ranges, what I'm most concerned about is that it is out of the ordinary. Right? In other words, is that trading range exceptionally or uncharacteristically wider or narrower than the average? We can see this range is considered to be wide. And then we've got the closing print. Now the closing print, this is very interesting. We closed near the highs, but notice how it slipped right back below that previous high of day, this dotted blue line, 94.22. That's the previous high of day. That's a really big hidden clue there. Now think about what this is telling us. First of all, tomorrow we can expect, because we have a 2-day relationship that's bullish, we're going to expect the buyers to continue. But obviously we'll have to wait and see what the opening print looks like tomorrow. This wide range today tells me tomorrow is likely to be a narrower range. Now, you know we're talking about crude, right? So this thing's going to do whatever it wants to do. But typically, we see a wide range today. It'll be a narrow range-bound day tomorrow. And then I really think the biggest clue we get here is a little bit of a curveball, because we saw this big move higher. And, you know, trading crude, I've been trading crude for over 10 years now, and we typically see these. Today was an inventory day, Wednesday. So it would be easy to think that the 8:30 Red Star news, followed by the 10:30 inventories, threw the fuel on the fire to get crude to go higher. We go all the way up, we test the previous week's high, we stabilize, and then we slip just below it. Now, I'm going to go ahead and say the closing print was bullish, right? It was at the highs, because it was. But if you look between the lines here, you'll see that we slipped right below that previous week high, almost as if to just announce to the world that these buyers were just having fun, right? That there really wasn't any long-term lasting reason for it. Now, obviously, I don't know what tomorrow will bring. I'll be here with you guys tomorrow at 8 o'clock in the morning in my trade room, and you know what we're looking for. We're looking to see here now, are we going to open up tomorrow at 9 o'clock above 94.64? If we do, we're bullish. Okay, we made that call this same time 24 hours ago above 93, and look what happened, right? So we're pretty accurate in this stuff. Open above 94.64, we're bullish. Okay, open below 92.73, we're bearish. If we open up inside this range from today, right, between these 2 points, we're going to be range bound, right? When we're range bound, that means that I'm buying the lows, I'm selling the highs, and if we get a breakout of that range, that's when I'll start to get aggressive at trading in the direction of the breakout. We also know there's a high likelihood that we'll get a fake out breakout, okay, if we open up inside tomorrow's range. So always be careful trying to force those breakouts if you open tomorrow morning inside the range from the previous day. Now, the one last variable here is that previous week's high. I have a funny feeling this big range from today is going to result in a little bit of consolidation for tomorrow. If we can stay below the previous week's high, we're probably going to get that gravity, right, to kind of bring this price back down. If we get below 93.77, the next shot is 93 even. We get below 92.88, yeah, we're going to keep on going lower. I got my prior week's low all the way down here at 91.24, and if we hadn't just seen the Russell do something similar, I would say there's not a lot of likelihood it's going to get 91.24. But remember, who are we talking about here? This is crude oil we're talking about. So it's going to do whatever it wants to do. All I can do is be prepared. So above 94.64, I'm bullish. Below 92.73, I'm bearish. I have a funny feeling we're going to open up inside the range. I got a funny feeling we're going to be two-sided tomorrow morning. But you know what, though? I hope I'm wrong. I hope it throws a curveball and we get a chance to get some really big runs tomorrow morning. We'll have to wait and see. 9 o'clock's the opening bell tomorrow. Now, when you go look at the anchor chart now for crude oil, we start to get a little bit more of an idea of what to expect. Now, I'm going to zoom out on this chart. You can see here I've drawn this trend line here, right? So we get a big trend line. That's going to act as some serious support. So we may definitely see price come down, right, and then go higher here off that trend line. So make sure you're aware of that support trend line. The big thing that I see, though, right now is that in order for us to move lower, we've got a lot of little speed bumps along the way. It's going to be a bumpy ride on the way down, right, if we end up selling off tomorrow morning. As you can see here right now, we have a long-term uptrend, but then look what's happened. Now we have this short-term move back off. Might be people taking profit. I personally think, though, that these buyers simply gave up after they got above the previous week's high. Remember, there hasn't really been any substantial long-lasting news. Inventories, retail sales, all of these reports are just noise. The only real news that we know is going to lead to long-lasting results or consistency in the future is going to be the non-farm payroll report, first Friday of every month, and what was the next one? What do you think it is? It's the FOMC meeting report, right? That announcement 8 times a year. Those are the only 2 news reports that I'm really going to think are going to keep things moving from day to day. So chances are high, and I know I'm predicting right now, but something tells me here we're going to end up right back down to where we began the session yesterday. Now, again, as price falls lower, I've got a couple spots here to look for reversals. Okay, so if these buyers really do want to get this thing partying back to the upside again, I'm definitely looking for a reversal off 93.69, and we'll take it long. A reversal off this trend line, taking it long. 93.14, same thing. Now, once I get below 93.14, a very important area shows up, 93.04. In fact, if I had to guess where we would go to, it would be 93.04. And then that's when we've got to really dig in, because what's most likely with our two-day relationships and with the strength of the economy kind of gathering steam right now, which we heard from the Beige book this afternoon, I would assume you're going to see a lot of long-term traders buying that 93. All right, big round number of 93. If we slip and fall, we're going to make it down to that 92.12 pretty darn easily. And that would be the last call for buyers. Anything below 91.80, and now those sellers are going to take full control. So it's always a little bit of a challenge when we find ourselves in this particular kind of scenario. First of all, we know that we have a bullish trend, but we'd be foolish to think that this bullish trend can keep going forever. So it's likely to pull back. Now the question is at what point does it pull back to and keep going? So really what we're going to do is this. If we start to take off to the downside overnight here, we're going to be selling short. But just make sure you don't sell short into any of these support levels, right? We can sell short, but we do want to make sure we don't sell directly into that buy zone at 93.69 or into any of these moving averages we have listed below. Again, I'm going to consider the buy. So every time we bounce off a level, I'm looking for a wave pattern long, two-step pattern long, slingshot pattern long, double bottom pattern long, right? Whichever the entry pattern is that we choose to use. So as we go lower, I'm buying 69s, I'm buying 14s, I'm buying 04s and 66s. And one more try here, I'll try to buy 92.12. As you can see, looking at this though, very little room here, right? There's not much room right there. So really what we're trying to do is, if we're trying to sell short, we better be selling now, and then also in between that 92.66 and that 92.12. And then again, once we get below that 91.80. So pick your spots correctly. Long-term bullish trend. My gut tells me we're going to pull back tomorrow. Probably going to go a little bit of sideways because of that big wide range. But again, I'd be lying to you if I told you I could predict this stuff. All I know is where my price levels are, the market sentiment that I need to be, and I'm going to react to whatever we see tomorrow morning. Professional traders do not try to predict. Our number one priority is being prepared for every situation, up, down, sideways, right? The whole enchilada. That way we can be ready to react tomorrow when we see it. Let's keep going. We move from the black gold over to the gold. Let's grab the gold futures, the 214 contract. So just like crude. Now, wait just a second. Here's another example of how last night's newsletter predicted exactly what happened. So, of course, last night we were talking about this range, and if you recall, we said if we opened up above, we were bullish. If we opened up inside, we're two-sided. If we opened up below, we were what? We were bearish. And that's exactly what happened. And just like we typically see, this is actually very, very common, is that when you see a gap down, it's usually going to pull back, test either a value area, maybe a value area low, test the previous low of day, and then it will go lower. So clearly these traders today on gold were bearish. Right out the gate here, guys, right out the gate, tried to go higher, but really just kept on cooking lower. Had a short covering rally that took it back up, and then you can see it kind of fluttered here sideways. Now, this gold price action was very interesting. Now, I always think of gold as a very good leading clue, a leading indicator for everything else. What is this price action telling me? What would somebody do if they were concerned about the U.S. economy? If I thought the U.S. economy was going to grow, what would I do? I would sell gold, right? Because I wouldn't need protection. What if I thought the U.S. economy was bullish and was was bearish and was going to fall apart? What if I thought we were going to go into another recession? What would I do? I would buy gold. So what happened here? Well, it looks like the sellers got hold of it overnight, right? Very clear there. You can't dispute that. We opened up below the range. But the big thing here is look how the day ended. The day ends right in the middle. So this tells me that although there were confident traders, remember, because if price falls on gold, that would be confidence in the U.S. economy or confidence in the global economy. Gold's a global market. But we know that there was some confidence there. But we also can see, though, well, let's take a look. First of all, two-day relationship is bearish. So we know we got the bears in control one day to the next. Second thing is, look at this narrow range. This is an extremely narrow range for gold. Remember, I want this range to be uncharacteristically narrow or wider, right? So this is uncharacteristically narrow for gold. Okay, this looks like gold on some sleeping pills. It does not look like the gold that we've grown to love. So we have a narrow range on gold. What does that tell me for tomorrow? Expect a wider range. And then the closing print. The closing print happened where? Just off the highs, just off the lows, pretty much right back where we opened the day today, right? There's the open, that dotted orange line. So we have the opening bell and the closing bell, pretty much the same price. Jackpot. Now, what is this telling me? It tells me that today's narrow range means that we're likely to have a large range tomorrow, either up or down. And again, I'm not going to try to predict. I don't need to predict. Tomorrow morning, we wake up tomorrow morning, we see price above 41.8, I'm buying. We see price below 33.5, I'm selling. Now remember, just like we saw today, if we gap up or down, we will tend to see a pullback or a retracement to test the previous day's range before we end up going. So if we gap down, we're likely to retest the low and then go. If we gap up, we're likely to retest the high and then go. So again, above 41.8, I'm bullish. Below 33.5, I'm bearish. Now, this narrow range today tells me that tomorrow we may have some significant fireworks. I'm very excited about this tomorrow morning. And we also know that above the high, what are we working with? Well, there's your previous week's high. We talked about that yesterday. And there is a fantastic target for you buyers tomorrow, 54.9. Okay, just imagine if those jobless claims come out higher than expected tomorrow morning. That is what? That is bad for the U.S. economy. That's going to have gold rising. So don't you be surprised if we end up getting up to that 54.9 lickety split tomorrow morning. What if we get down below the open, or what if we open below 33.5? Well, now we got targets down below us for sellers. We got actually a few great targets, specifically 26.6 and 22.8. So we're looking good for a very wide range. So imagine now we get a big open below, right? We're going to have a big range below, open above, big range above. And this is just getting the party started. I've got levels above us up top here, 63.2 if you look up top. So we got 63.2, 67.5, 75.6. Because remember, we are expecting a big range tomorrow. To the downside here now, we get a lot of other targets to the downside. Again, 26.6, 22.8, 18.3, and you can't forget about the prior week low, 12.6. So here's another big range to the downside. So, boy, I'll tell you guys, it looks like we're going to be in for a pretty good ride tomorrow morning, most likely. We get a lot of news hitting the schedule tomorrow, 8:30 and 10 o'clock, and then Bernanke at 11 o'clock. So if we don't see a very good day tomorrow on gold, I will be very, very surprised. All right, keep an eye on those opening prints tomorrow morning, because that's what's going to give me the clue that I need to know exactly what to do next. Keep moving here. Here's the anchor chart on the gold. Now, the anchor chart on the gold, I'm going to go ahead and zoom out pretty far here. I want to show you something. We have a double top, almost a triple top here. And that double top that you can see right here, that double top is going to result now in support below. So 32.3, that's going to be my support level now below me. Okay, so that's going to be a key level of support. Okay, use double top right there. Very, very easy to see. Let me zoom back in now, and what you're going to notice is that this bearish trend, this is why I love being a trader. You can just feel the momentum turning, almost like a battleship in the middle of the ocean, right? Bearish trend, sideways trend, bullish trend. So here we are, we're above all the moving averages. We get a bull channel forming. All signs say we're going higher. Now remember, what I'm going to do is, whenever I see us get above the moving averages, whenever I see us in a bull channel, short term and long term, I get pretty excited about this because this is the easy money here. So each new higher high, I'm now looking for wave patterns on my entry chart. Now this is the anchor chart, so I'm not taking patterns on this particular chart. What I will do though is I will look for the same pattern on the anchor chart and then move quickly over to my entry chart to take the entry. Right? We like to find the direction and key turning points on the anchor chart, and then we use the entry chart to find our entry. That way we can have really small stop losses and really large profit targets. Now, even though we're bullish, we saw on the VIP chart just a few moments ago that this really could go any direction, right? Because it did close the day off its lows, off its highs, right in the middle. So scenario one is we trade sideways. And if we trade sideways, we're sitting on hands. All right, we're sitting on hands. If we go lower, I'm going to buy the 38.2. Go lower from there, I'm buying the 36.1. If we go lower from there, that's when those sellers step in and we will get price moving quickly down to 32.3. Now, I'm not saying I'm going to buy 32.3, that double top support. I will definitely be looking to take profit on my shorts, and I'm going to stay patient. If we see a reversal off that 32.3, right, if it rattles around and then goes, now we're talking. Now I will go in and look for the entry to get long. So really what it has to do with is if I get below 32.3, I'm selling. I'm selling, I'm selling, I'm selling. As we go lower, though, we're going to look for bounces off of these key reversal locations at 38.2 and 36.1. And again, I'll take my profit here. If I get in below 36.1, we'll look for a short trade down to 32.3, a little scalp there on the way down to that support level. Now, if we never pull back, if we keep going higher, I have a green light right now to get buying with my wave pattern long. And I'm going to use the following levels as my profit targets. I've got 43.2, 44.2. I have a major reversal level at 45.2. That's where I'm going to be taking my profit on the next entry long, right? So 45.2, that's the hero target right there. Very important there. Additionally, we got 46.7, 47.5, the previous week's high. That previous week's high is definitely going to be a level, just like we saw in crude, go all the way up and then possibly come all the way back down. If we just see a bunch of news that's noise tomorrow, we may see exactly that, just like we saw today on crude. As we keep going, we got a couple more targets up here. So the previous week high, if I had to pick three levels, right, I would pick the 45.2, the previous week high there at 48.5, and the 53.6. Okay, these are the three levels. If I had to choose three of them, those would be the three I would choose, right? The 53.6 obviously being the big runner target. All right, guys? So a bullish sentiment right now on the anchor chart. We got a bullish channel. We're above all the moving averages. The only thing that we're asking ourselves right now is are we going to go lower before we try to go higher? Or are we just going to keep on cooking here to the upside? And remember, we look back at that VIP chart and just look at all the range that we have available. We get above this area, guys, and we are cruising here quickly, right? There's a lot of space to make up. That's literally $14 worth of, right? That's 14 points on gold. We have potential for a huge move tomorrow. So that wraps up with gold. Last but not least, how could I forget about the mighty mini Russell? The mighty mini Russell here, the symbol TF, we're trading the March 2014 contract. And once again, we were 3 for 3 today. We told you guys if we opened up today above that 61.7, don't take my word for it. Go back in time, watch yesterday's newsletter. You'll see exactly what I was talking about. So sure enough, opening bell, we gap up. We never even looked back. We jumped right to the highs. right? This is actually a projection for all my students out there that were in the trade room today. We went right to that projected fib number, didn't we? So it was very interesting to see price go immediately like a rocket ship right to that expected fib number. Had tons of our students today jumping into that first few moments of that move on Russell and just made a killing. So congratulations out there. One student of mine that comes to mind, his name is Anders, a brand new student of mine, did a great job at finding those high percentage wave patterns when he saw that gap up right this morning. So hats off to you, Anders. Great job today in the trade room. Let's do a recap here. The 2-day relationship is bullish, right? Multi-day is bullish. The range today, very narrow, right? So even though we had a rocket ship right at the opening bell, which is where most of us made our money, there wasn't a lot of money to be made after that. So once you took your profit going to those highs, you were pretty much done. So it wasn't a huge range. It was just bam. It was concentrated into a few moments right at the opening bell. And then the closing print. Look at the closing print. Closing print at the highs, very bullish. So 2-day relationship is bullish. The range being narrow and the closing print being bullish. Now, guys, I don't know if I believe this. I don't know if I trust what my eyeballs are seeing right now. Do you see this? From what I can see, we've got bullish clues, and then look at that narrow range. Now, remember, narrow ranges usually result in what? In wider ranges. So, Joe, are you trying to tell me that we're going to be a huge move up again tomorrow? Well, I don't like to predict, but I'm just saying narrow range usually results in wide ranges. So all of this pent-up buying here, this thing might explode tomorrow morning. And you know what we're looking for? Same thing we said yesterday this time of day. We're looking tomorrow morning for an opening print above 69.5. So tomorrow morning at 9:30 a.m., okay, that's our official open of the E-minis. I know the Russell isn't an E-mini anymore, but, you know, self-fulfilling prophecy. And so 69.5, right, we're buying above it. Open below 61.7, which I think is, now I know what this is telling me, but I've been watching this Russell long enough to think that I would think the way that it would go would be right back down. But who knows, right? I just work here. So open below 61.7. We're bearish, and we know we have a target down below at that 48.1. That's the scenario that I would think is going to be the big move tomorrow, okay? Again, I won't know until tomorrow morning when I see what that opening print looks like. As you can see, though, targets below us here, 48.1, 43.2, 38.6. These are going to be great sellers targets, right, if we open up below 61.7. Now, open up inside. Now, the Russell loves to do this. The Russell went a full week going sideways. So if we open up inside, we know that we're going to be two-sided. That means I'm buying the previous low of day. I'm selling the previous high of day. And then again, if we get a breakout, then we'll go and we'll trade in the direction of that breakout. Okay? Looking good. So the narrow range is a very big clue. The narrow range, a big, big clue. We might see some serious movement tomorrow in the E-minis, okay, specifically this Russell. The bullish sentiment day-to-day and the bullish close, it's almost too good to be true, right? It's almost too perfect because right now this is all telling me we're going to open above 69.5 and we're going to have a huge update tomorrow. I know, I don't believe it either, and we'll have to wait and see what happens. But at least we know we're prepared for all three scenarios, up, down, and sideways. There's your Russell VIP chart. Let's wrap up tonight's newsletter with the Russell anchor. And just when I thought it was going to get easy to say short, the Russell steps up and, well, we're bullish. Once again, we see here we've got a strong bullish channel. We're above all the moving averages. We're above the prior week high. Guys, I'm searching for some holes in this bullish sentiment, but I can't find them right now. I cannot find a reason to say we're going to be bearish, right? Other than the fact that it just looks too good to be true. It's perfect. So, okay, so we know we're looking to buy. We're above all the moving averages, so guys, green light, get going, right? Start buying right now. I would like to see a new higher high just to make sure that we're still partying to the upside. And then if we can get going long here, I've got some great targets for us. 71.5, 73, 73.9, 76.7, and 78.7. So of course what I'll do is I'll use our wave patterns, I'll use our two steps, our slingshots to get in long, and then I'll use those projected levels overhead, right, as my profit targets. Now, you know what I always say, oftentimes price has to go lower before it goes higher. So what if we end up going lower? Well, I've got a reversal zone here at 66.7. I have another one here at 65 even. And then we also have one more here. You'll notice we've got a prior week high, but that's not the big deal. The big deal here is I've got a moving average here right around 62. So that would be, if we get below this 65 even, now those buyers have lost control, and I'm going to be looking to sell short. Where am I selling short to? Prior week high, moving average. If it wants to keep going, I'm going down to the low of day, right? That's the low of day from today, 59.3. And if you really want to get crazy to the downside, we go all the way back here to 44.5. That's the prior week low. All right. Now I'd be lying to you if I said there's no way we can get that far down, because we all know these markets have been red hot the past few months. But it does look like right now that as hard as I keep trying, I cannot find a reason to say the word short. So looking bullish on the Russell here today as well. Now remember, everything we're talking about revolves around tomorrow's opening bell. I have to be ready to react. I've got my prep work done. Now tomorrow morning, come join me tomorrow as an advanced student in our trade room. I look forward to welcoming you as a trial member into my trade room tomorrow afternoon. But if you want to trade with me tomorrow morning, come join me as an advanced member. Let's roll those sleeves up. If you're serious about making 2014 the year that changes your life forever, now is your opportunity, guys. Once again, my name is Joseph James from the corporate office here in Los Angeles, School of Trade headquarters. Thank you so much for watching our newsletter. Don't forget to register for the trial. Don't forget to sign up on our blog for the newsletter. And you guys have yourselves a great Wednesday evening. Remember to learn it so you can earn it. Adios, amigos. Bye-bye for now.